Joining us is Nic Davies, Senior Vice President Risk with Admerex, a supporting sponsor at the Credit Risk Management Conference in Sydney on the 25th to the 27th of February. Welcome to IIR, Nic.
Thanks very much.
Nic, what lessons can banks in Australia take out of recent events in the US subprime market?
I think the US subprime events really illustrate that it's very important to understand the risk that you buy. So in this sense, banks have actually bought portfolios of debt, and they probably haven't really understand the true portfolio characteristics. So as banks now are looking at improving their risk processes, it's important to make sure that that comes up into a portfolio context and you understand what's happening in your portfolio.
Nic, given these events, what are the implications for risk managers in Australian banks, if any?
Well, I think some of the lessons to be learned out of the US is where you've got a lot of external data that comes through. You do actually have quite liquid markets that enable these types of instruments to be traded, and that of course is a benefit and something the Australian industry can move towards. But I similarly I think as Australian banks are again investing in these tools and processes, they make sure that the total practice of managing a portfolio of risk is understood properly.
What are the implications for risk managers in banks of the pace of business borrowing, now the fastest in almost 20 years?
Yeah, well, I think that's very important. In business lending, there's much more of an imperative to focus on risk management, mainly because you can price for risk. There's not a huge amount of that available in consumer banking. So the potential for return and payoff from having good risk practices in your business banking area is much higher, and therefore it warrants much more attention.
Nic, has the earlier adoption of Basel II, the international standard for banking regulators in Australia, meant an improvement in risk management practices vis-à-vis the US?
Look, I think this is maybe going out on a limb, but I'd have to say yes. I think Australian banks and the Big Four here are relatively advanced in a global context. They've invested a lot of time and effort during the 90s and the late 90s, from the early crises we had in the early 90s, in their risk practices, and that has certainly been an impact on how they're managing their portfolios now.
Nic, but Basel compliance should not be the only driver of investment in risk management. How are banks using their risk expertise for competitive advantage?
Yeah, well, that's absolutely right. I think as risk management processes and procedures are being perhaps a bit more established as a result of Basel II, the focus really needs to be on how do we take all that investment and all this activity that's around Basel II and embed it in our business so that we can use all those learnings in a proactive manner.
Nic, finally, what would you like delegates to take with them from the Credit Risk Management Conference?
I think the conference has been quite well structured in that you've covered a large range of the pertinent areas, so there's a holistic sense of what is needed for good credit risk management. We're looking at the modelling. I notice you have some regulators and talking about Pillar 2 type issues, and then finally also some Pillar 3 and disclosure context. So I think it's important for participants to consider the conference in its totality and understand the whole range of risk management activities, and really take the opportunity to speak with the different people that will be attending and understand different perspectives and see what's going on in the industry.
Nic Davies, thanks for joining us. We look forward to seeing you at the conference.
Thanks very much.
For more information about the annual Credit Risk Management 2008 conference, visit www.iir.com.au/credit risk.